presentation.
Just checking. Good afternoon, everyone. On the behalf of Forward Zoo Limited, I would like to introduce myself as a Niraj Pokharel, Financial Manager for Forward Zoo Limited, and I would like to introduce my other team member, Rakesh Lama. He's our Operations Manager, and same as Niroj Khakurel as a Marketing Manager, and the Mohammad Abed. Hossain, he's our Human Resources Manager for Forward Zoo Limited company. And today we are going to do the shareholders meeting year 2013. And without wasting any time, I would like to go with our strategy and the policies, what our company is adapting in order to run our company. And first one, our company is committed to provide its customers with good quality footwear at competitive price in the market. And similarly, we always focus on the revenue maximization and cost minimization. And we always try to improve the efficiency in production and distribution from the plants to warehouses. And same as use of the spare production capacity for manufacturing of the private level shoes instead of the wasting those capacities. And now I would like to start with our key outcomes, and we can see there our earning per shares. Our earning per shares is increased by 1.1%. $1.1 compared to the last year in 2012. We can see our earning per share in year 2012 was $4.38. On that, our investors' expectations was $3.05, whereas we're able to get $5.39. That's the earning per share. And the reason for the increase in the earning per share is in year 13, company made a good amount of the profit as compared to the year 12, because of the increase in the sales revenue resulted in EPS earning per share of $5.39, as we can see there, as compared to $4.38 on last year. The management decided to pay $1.29 dividend for this year, which was $1 last year. And I would like to go on the returns on the equity now. Our returns on the equity has we can see it's increased from 22.6% to 24.6%, which is exactly 2% higher. And though our investor expectations was 15%, in this regard as well, we're able to achieve our returns on equity. It's because of our the reason for the increase in our returns on equity is the increase in our net profit and decrease in the shares outstanding. And similarly, I would like to go with our stock price. And we can see we started with the $1.30 in year 10, whereas now we are at $110 per share, which is really good in the competitive market. And though our investor was expecting $36.75 for the year, but we can't even compare like how good we are because of the heavily increase in the EPS and ROE. The market confidence in the company and its share price inclined from $90.78 to year 13 $110.78. And now I would like to go with our credit rating. We can see the credit rating of the company increased to A+ in year 13 because of the increase in EPS and decrease in the long-term loan outstanding and no overdraft. I would like to mention that we have paid 10 years loan of $11 million. We have paid it back, and that's the reason our credit rating is high. The company's image rating is we can see it's a little bit decreased by 9 points as compared to the last year's because of the increase in the wholesale price. The company has achieved all the investor expectations as well, except for our image rating. And now I would like to go with our finance. And as we can see, our revenue as compared to year 12, it looks like it has decreased by 11.72 million, but we can see our expenses was decreased as well, almost by the 20 million, which resulted our net profit it increased by almost 3%. And the decrease in the revenue was because of the higher branded shoe price in year 13. And same as our And same as our now, we are started with the $5 million cash position, and now we are maintained to have 19.16 million. Just we are keeping that cash in hand in order to upgrade our company if we need in the future. Similarly, I would like to go with our financial ratio. We can see our current ratio has increased from 3.6 in year 12 to 4.03 in year 13. The current ratio increased because the current assets and the current liabilities both increases, but as compared, our current assets increased a little bit more than the current liabilities. And we can see the debt to the assets ratio here. The debt to the asset ratio declined in year 13 as compared to the year 12. Only, and now it's maintained by only 17 cents of debt for to recover a debt of every $1 for the asset. This is because the management's ability to meet its obligations to pay the current portions of the company's long-term debt and increase the total assets. And I would like to go with the interest coverage ratio, which is increased in year 13 to 16.87 because of the huge increase in the operation profit in year 13 as compared to year 12, and the deferred risk has increased from 3.98 in year 12 to 4.58 in year 13, which is really good increase in the free cash flow as well. And I would like to call upon the podium my marketing manager Niroj to explain the furthermore. Thank you.
Good afternoon. I'm the marketing manager for the Footwear Shoes Limited. I'm here to tell you about the marketing strategy we have adopted in our company. So we have offered like 250 models in the market, and with that we have offered in a mail-in rebate of $2 per pair to attract more customers. Likewise, this year we have increased our wholesale price to 47.82 from 47.14, just a cents increase on a wholesale segment for the shoes. Likewise, for the internet price, we have started at $75 per pair in year 2010. We have kept it $65 per pair in year 13, which has led to 7.8% market increase in the internet segment. Likewise, advertising has played a vital role in our increase in our sales. So we spent 30 million on advertising, which was 27.14 million in year 2012. Spending more on advertising had strengthened our brand awareness, helped pull buyers into retail stores that have been using our brand names, and inform people about the new lines and features of our latest styles and models. Likewise, retail support. We have achieved to get a retail support of $400 per retailer in all regions, because we want to keep close relation to our footwear retailers so that we can boost sales and we can do easily business with them. Now, delivery times. We have kept the delivery times of 3 weeks to retailers in all the regions so that our footwear retailers can stock the brand, and which will boost sales since retailers are less likely to run after stock of particular size and style. If we have kept the delivery time a little bit shorter, then it is of sure that it will entail higher shipping costs and higher inventory requirements, so that we have kept an average delivery time of 3 weeks to all our retailers in all the regions. Likewise, some of the training strategy and expenditure we have used. So we have increased our annual base wage by 1%. Likewise, we have spent on TQM and Six Sigma quality program 40 cents on both of the plants, North America and Asia Pacific. We have increased our per worker best practice training from $1,000 to $2,000 at both North America and Asia Pacific plants. Likewise, we have increased our incentive pay at North America plant from $30 to $40 per pair, and in Asia Pacific from $50 to 85 cents per pair. So due to the increase in best practice training in 2013, the productivity in North America and Asia Pacific has increased as well. So it's increased from 3,999 pairs per worker to 5,088 pairs in year 13. So we have not been able to decrease the reject rate so far, but it's considerably a little low than it used to be on year 12. So it was in year 12 in Asia Pacific it was North America it was 6.3, now it's 6.2, and in Asia Pacific it's down to 7.3 from 8%. Now I would like to call my operation manager to discuss about the operation he have used in this company.
Thank you, Niraj. Good afternoon, everyone. I'm Rakesh Lama, operating manager for Hossain Limited, and I'd like to go with the branded production. We have fully utilized our branded production. Our branded production in both plants. We have increased our production according to sales forecast, and our production is increased by 0.869 million, and the remaining of the production capacity is used in private label production to maximize the revenue. On workers' productivity of workers in North America plant in general is higher comparing with Asia Pacific plant. We have spent 7 million to upgrade plant in North America, and in year 13 the production is increased by 1,089 pairs in North America plant, whereas in Asia Pacific the production is increased by 56 per pairs. And I would like to go in branded production cost. Branded production cost in both North America and Asia Pacific plants is decreased due to the decrease in superior material and increase in production. And in year 13, the branded production cost per pair in North America is $28.15, and in Asia Pacific the branded production cost is $19.24. And in reject rates, in 13 the reject rates at both plants reduced considerably because of increase in expenditure on best practice training and incentive pay per pair at both plants. Thank you. Now I would like to call Human Resource Manager Mohammad.
Good afternoon, everybody. My name is Mohammad Abed Hossain. I'm a HR manager in Forward Shoes Limited. I'm going to present Human Resource Department of Employee at 2013. In our company, year 2013, focus good quality products, and we also focus how we look after our valuable factory worker. Our employee normally come two plants, North America and Asia Pacific. Now I will present our employee compensation year 2013. In the beginning, total compensation in year 10 to $20.1 and is increased year 12 $21.2, and we increase year 13 also $23.5, and Asia Pacific $3.7, and year 12 $4.2, and year 13 increase $5.3. And in total our amount of employee in North America year 10 501, and we increase year 12 502, and we reduce the North America employee in year 13 394 because North America labor cost very expensive. But we in Asia Pacific year 13 we have a 1412, and we increase year 12 1600, and we reduce year 13 1565. Because we are focused also how we reduce our labor cost and cost also, and we motivate our employee for give it a more compensation and intensive pay. Now I need to call my friend Rakesh Niroj Khakurel for marketing management. He explained the future strategy. Thank you.
Thank you. Now I'd like to conclude. Our management has been very good in all 3 years. In year 12, we achieved award from the industry as well, and award from the industry as well, and it was very best in year 13. So the management has committed to meet all the shareholders' expectation, which is very, very good. And some of the future strategy for footwear for forward shoes are, we'll try to increase in sales. We'll try to grow our sales revenue by increasing advertising and adjusting wholesale and internet prices. Likewise, we'll try to maintain our current credit rating of A+. We'll try to improve our image rating. Likewise, we will maintain our expenditure on best practice training to increase the workers' productivity, which will result in low reject rates, and we will further maximize shareholders' value and higher dividend payout. Thank you.